Let me guess. You followed every trading guru, memorized a dozen can't-fail strategies, and yet your account balance is the only thing trending down. Sound familiar? This is a classic trader's journey, a graveyard of other people's systems, leaving you one bad trade away from giving up completely. My story started the exact same way, until I did something that felt crazy. I deleted everything. All the indicators, all the templates, all the conflicting rules. I started over with a blank chart and focused on one single and powerful market principle that most traders tend to overlook. That one concept is what finally took me from system hopper to consistently profitable trader, and it's what I'm going to share with you today. I spent years jumping from one popular strategy to another. One week I was studying breakout trading, the next I was deep into supply and demand zones, and I was learning to scalp with order flow. Every system had its merits, and I learned a lot. But the problem is there was no single system that fit my personality perfectly. Instead of finding clarity, I found chaos. The rules from one strategy would sometimes contradict the rules from another. They call this analysis paralysis, and it's an absolute killer. I second-guessed every single move. I'd jump into a trade based on one system, only to be consumed by doubt because of a different strategy I learned last month, suggesting the exact opposite. My confidence was shot, and my account balance, it was steadily bleeding up. It was frustrating and demoralizing. I was stuck in a trap so many traders fall into, believing I had to follow one system perfectly, when in reality, I was trying to follow a dozen different roadmaps at once, and they all were leading me off a cliff. My aha moment didn't come from finding a new magic system. It came when I realized I was trying to be a dozen traders all at once. I deleted all my old chart templates and started at a completely blank screen, just pure price bars. It was terrifying and liberating all at once. I decided to build a system from scratch, not to forget everything I had learned, but to quiet the noise and find a common thread. This time, my goal wasn't to copy a prepackaged system. It was to synthesize the core lessons I'd learned into a framework that made sense to me. The breakthrough idea was this: stop trying to predict where the market is going and start reading its natural rhythm. The price you see on the chart is the ultimate truth, the final result of every news event, every earnings report, every institutional order, every shred of fear and greed. But it doesn't just move in straight lines, it expands and contracts, just like breathing. My job wasn't to chase it, it was to understand its tendency to always return to its average. Shifting my mindset from a chaser to an ambusher changed everything. The core idea I embraced is one I call exponential mean theory, or EMT. Don't let the fancy name scare you off. All it really means is that while price can make extreme moves, it acts like it's attached to its average by a rubber band. The further it stretches away from its mean in either direction, the more tension builds up for it to snap back. Oh! I guess you better follow my advice if you don't want trading to hurt that bad. Moving on. So if the market always wants to return to its average, how does anybody make money? Well, here's the trick. Instead of fighting that tendency, I started working with it. I gave up on trying to chase breakouts or ride trends to the moon. I stopped believing any single strategy could tell me when the trend would run forever. My new edge wasn't about knowing what would happen next. It was about seeing how far the market has stretched from its mean and having a rock-solid plan to react when it showed signs of exhaustion. Think of it like this: I wait for the rubber band to get stretched to its breaking point, and then I place a bet that it's about to snap back. It's a strategy built on patience and identifying extremes, not momentum. Once I fully embraced this philosophy, I built a dead simple 3-step framework. This is what I use to trade ES futures every single day, and its power is in its simplicity. Step 1. Identify the mean. Before I even dream of placing a trade, I establish my baseline. For my exponential mean theory, I use one single exponential moving average, or EMA, on my chart. This line represents the market's current average price. This is the most crucial step because it gives you the context. Your entire goal is to see how far the price gets away from the line. Step 2. Find the point of exhaustion. Once I have my mean, I look for the extremes. These are points where price is stretched unusually far above or below the EMA, like a bowstring drawn to its limit. This often happens at key prior highs or lows where the market ran out of steam before. These are the zones where the move is likely overextended and due for a reversion. I just wait for price to get to that point that looks like a clear overextension. Step 3. Wait for the verdict, the entry trigger. This is the part that demands the most patience. It's where most traders blow it. I've got my mean and I see the price at a point of exhaustion. Now I do the hardest thing in trading. Nothing. I wait for the price to show me it's tired. Do sellers get rejected far below the mean? Do buyers fail at a peak far above? I'm looking for clear price action signal, like a big reversal candle or a sharp rejection wick. That tells me the extension is over. That verdict is my trigger. I'm not guessing the top or bottom, I'm reacting to the market proving it to me. By the way, if you're finding this simplified approach helpful, do me a quick favor, hit the like button, and subscribe if you want more content that cuts through the noise. It genuinely helps the channel a ton. Alright, let's pull up the charts and see this in the wild. Here's an ES 5-minute chart from last week. First, step 1. I've got my EMA on the chart, which is our mean. We see price goes up on a huge run-up, getting stretched way above the average. That brings us to step 2, a point of exhaustion. Price is now looking very overextended. Now for step 3, the patient part. We wait for the verdict. Price is way up here and the rubber band is tight, but I'm not shorting yet. I'm watching. And then, boom, we get this massive bearish engulfing candle. The buyers who are pushing it up have vanished. That's the verdict. Once momentum shifts, I'm stepping in and looking for the price to find its way back to equilibrium. The market was overextended. The reversal signal was clear, and the price action snapped back to the mean for a nice, clean profit. Now let's see how this keeps you out of bad trades. Here the market was in a strong, healthy uptrend, but notice how the price is staying very close to the EMA. It pulls back to it, touches it, and then continues. According to my EMT framework, there is no trade here. There's no overextension, no stretch rubber band, no point of exhaustion. Since I never got a primary condition met for this setup, I never took a trade. And thank goodness, because trying to short this would have been fighting a strong trend. My framework demands an extreme move first, and that saved me from a loss. Knowing when not to trade is just as important as knowing when to trade. Now listen, this concept is powerful, but it's not a magic wand. It only works if it's built on a foundation of ironclad risk management. Any strategy without it is just pure gambling. Before I even think about clicking the buy or sell button, I know to the penny where I'm going to get out if I'm wrong. And that's not a mental stop. That's a market stop. My rule is simple. I never risk more than 1% of my account on a single trade. That's it. This means even if I hit a nasty string of losses, I still have more than enough capital to fight another day. The goal isn't to win every trade. Nobody does. The goal is to make sure your winners are bigger than your losers and that no single trade could ever take you out of the game. This is how I survive. Profitability is a long-term game, and capital preservation is the only way to win it. The moment I stopped trying to force-fit myself into traders' systems and instead integrated the most useful principles around one core concept, everything changed. My charts went from a source of constant stress to a source of pure clarity. My decisions became faster, less emotional, and way more confident. I stopped chasing the market and started letting the high-probability setups come to me. But the transformation wasn't just on my P&L statement. It was in my head. I no longer felt like I was fighting some chaotic, unpredictable monster. Instead, I felt like I was finally learning its language, the language of expansion and contraction. The journey to profitable trading wasn't about finding a secret formula. For me, it was about subtraction, not addition. It was about stripping away all the noise until only the simple truths of price and its relationship to the mean remain. So to wrap it up, stop making things so complicated. Focus on reading the market's natural ebb and flow through clean price action. Use this simple framework. First, identify the mean, then find the points of exhaustion, and finally wait patiently for the reversal. And above all else, live and breathe risk management. While the framework itself is straightforward, there are quite a few very specific nuances to executing it with precision, which are all details I teach in my mentorship. You can bring this same sense of calm and clarity to your trading. It takes patience, it takes discipline, but I promise you, the results are worth it. I have a question for you. What is the single biggest thing you're struggling with in your trading right now? Let me know. I read every comment and would love to help out. Thank you for watching, and I'll see you on the next one.